Hello and welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Molero.
And we are
the FAIRtax Guys.
And we invite you to like us on Facebook, which is the best way to get in touch with us now. We still have our thefairtaxguys@gmail.com email address, but we're kind of leaning towards the Facebook communication with everybody. So go to facebook.com if you have a Facebook account and check out the FAIRtax Guys. Okay?
All right. The last two programs, hopefully you listened, we talked about some of the current tax proposals that are in the 115th Congress, which is only a few weeks old. It's only a few weeks. And we have to apologize. We kind of underestimated the ambition of these little critters up there in D.C.
We were messing around with Congress.gov, and they've got a search box there, and we just put in the words income tax, and that brought us back everything that had either or both of those words in the description or the thing, and we got back about 300.
Yeah.
Put quotes around that to make that a phrase, so you have to have both of those words together, and that dropped it down to a little over 100. But then we had the brilliant idea that we will search on the phrase Internal Revenue Code of 1986.
Yeah, because a lot of them say to amend the Internal Revenue Code of 1986.
And when we searched for bills on Congress.gov that had the phrase Internal Revenue Code of 1986, we got how many?
2,000. Well, let me speak into the microphone. 2,063.
Wow.
Folks, it's not even 2 months.
It's worse than we thought.
of the new Congress. They've got over 2,000 bills to modify the income tax. That was the purpose of the last two programs, to show that there's incessant changes and there's no stability. Stability is a big issue. And it's very important. I mean, how can businesses plan without stability in the tax code?
All right. And we have brought in a hired gun to help us take a closer look at the Ryan plan, looking at the stability of it, the evasion that we've been talking about, and we can get him to go on border adjustability a bit later. That's a phrase that I imagine most people aren't hugely familiar with, but it is vitally important to the tax code. And our hired gun, we've talked to him before. Hello, Randy.
Hello, folks. I am a former retired hired gun for the insurance industry, and had the sorrow and privilege of trying over 300 jury trials in my 36 years. So I had to get the Rust-Oleum out and wipe them off of my hired guns.
Okay, this is Randy Fischer. I don't know why. I apologize, Randy. I had a brain block right there when I mentioned your name. I was thinking of a childhood friend named Randy Shepard, and I said, no, that's not right. Randy, Randy Fischer. Okay, so I apologize. But now that we have you properly introduced, well, speak a little bit about the stability of the Ryan plan that is being pushed by Congress right at the moment.
Well, the Ryan plan is really an invitation for more work for more lobbyists. And the reason for that is it includes the ability to what's called border adjust taxes on exports.
Yeah, now that is a phrase that I imagine, say, a lot of people aren't really familiar with. Explain border adjustability as best you can.
Well, border adjustability, if you think about goods produced in the United States today, they have a large number of embedded tax costs, compliance costs, and avoidance costs, meaning the payroll taxes, income taxes, investment taxes of those businesses get rolled together. They have a compliance component and an avoidance component. And all of that gets added into the price of the cost before the good is exported. Under a border adjustment tax, I hate to call it a scheme, but in a way it is.
Yeah.
Under a border adjustment tax, they allow the manufacturer or exporter to remove a good portion of those costs, but not all of them. What they let them do is they can take out the employer part of the payroll tax. They can take out some of the compliance costs related to that. And again, this is going to be a series of adjustments and trade-offs, and you're going to see it fought over like just a pack of dogs over a side of ribs.
Yeah, because when it comes to the compliance cost, that's not a fine science. I mean, that's kind of a nebulous term.
Absolutely. They're going to be playing so many games with so much smoke, using so many mirrors, that my belief is that the World Trade Organization, which runs this thing, WTO, this is a complete alphabet soup. You've got the World Bank, and I lost my notes. I had made some notes. You've got the International Monetary Fund, IMF, which does a lot of the lending and credit, which begat the World Trade Organization, which begat the GATT, G-A-T-T, which is the General Agreement on Tariffs and Trades. And you want to get lost in an alphabet soup of rules and regulations, you just add the entire world into it on top of our 74,600 pages of tax code. And the next thing you know, you've got all kinds of games getting played.
Oh, yeah. And the whole idea is that you want to reduce the price of your export goods that are going to be out on the global market, so that if a car, for example, produced in the United States has a lot of tax component in the price, and a car that's produced in Japan or Korea doesn't, then the foreign car has a much more advantageous position in the world market because their price is lower. They don't have all those taxes embedded, and we got to figure out how to get competitive there.
And they're all going to be fighting over who writes the rules as to how much of what component can be border adjusted. And that's where Congress will continue to get its campaign funds, is through the lobbyists who will be representing all of these companies that do any kind of export of any good whatsoever.
So the net result is that this border adjustability scheme in the Ryan plan that he calls the Better Way keeps in place a lot of the shenanigans that are currently going on and making our tax code larger almost on a daily basis.
And that's only during the 10 years of litigation that it's going to, or more, that it's going to take before the WTO says, no, you can't do this. And all of a sudden we're back to square one.
There's got to be a better way than the better way.
A better way than the better way that Ryan is calling it. I believe we call that the FAIRtax, gentlemen.
Yeah, I believe
Absolutely.
that, yeah. We seem to keep coming back to that theme, Bob.
Yeah, Randy, speak to how the FAIRtax relates to border adjustability.
Well, the FAIRtax completely eliminates those embedded costs because it eliminates the taxes. There's no payroll tax, either employer component or employee component. There's no income tax. There's no investment tax. So you're not, your investors aren't having to weigh what happens to the returns on their investments from a tax standpoint. And all of the compliance costs, and more importantly, the avoidance costs that go with that are gone because the taxes don't exist.
You no longer have to pay an army of accountants and lawyers to get you through the tax code maze.
I saw something where General Electric alone spent over $1 billion on avoidance.
Wow. And it worked. They didn't pay any tax at all one year, right?
Yeah.
Several years, they ended up with a negative tax situation with a carryover loss on certain components of income taxes.
And Bob and I did an episode, the tax code written by millionaires for millionaires, because one, half of our people in Congress are millionaires. Two, they write the tax code to benefit themselves. And this is a very similar situation, except it's for businesses. They write tax code to favor businesses that seem to contribute towards their campaign coffers.
And it's really for the purposes of knocking down potential competition. It's literally K Street in a war against Main Street, because small businesses do not have the ability to do anything remotely approaching what some of these large businesses can do when they get a tax code compliant regulation that allows them to do something that a small business can't do.
Yeah, and the media loves this war on this and war on that, so we got the war on Main Street.
Oh, yeah, that's us, folks.
Yeah, that's us. That's right. Yeah, so
we're the ground troops and we're the casualties because we end up paying it all anyway.
So we have Again, left over from the last two, or summarizing the last two episodes, we have a very sincere lack of stability in the tax code. And if you want to prove that, just go to congress.gov and type in the phrase, in the search bar, the Internal Revenue Code of 1986. And so far, in just a few weeks, they've come up with over 2,000 proposals to change the tax code.
Now, not all of those are going to get through, but a good number of them will.
Yeah, and nothing's going to change that if you keep the tax code. It will not be stable. And then you got this border adjustability fiasco. And like Randy said, you got the World Trade Organization that could come and rule against the United States. And then our third problem is evasion.
Evasion. We've hit on that as well.
Yeah.
And let's open this segment on evasion with a little interview that we did a while back with Steve Hayes, who is the president of AFFT, and he has spoken personally to Paul Ryan.
That's right.
And so, if we can, let's.
And this is an excerpt from our interview with Steve Hayes of last September. So let's listen to this.
And he said
the tax gap is just unimaginably huge.
Well, it's over $600 billion now.
Now that is taxes that are owed, but the current system is not collecting them.
Yes. Yeah, taxes that are estimated to be owed, and it's estimated because it's a little bit of wiggle room, but it's between 600 and maybe even, like some people think 700 billion.
Wow.
But the situation that you have, it's like, I think I may have told the story, but I think it's important. When I talked to Speaker Ryan before he became Speaker, when he was chairman of the Ways and Means Committee, it was an engaging talk. He's a very pleasant man to talk with. He actually comes across on TV the way he actually is in person. It's unusual. But he said to me, I'm really committed to a particular reforming the present code and changing it, making it simpler, making it cheaper, lower rates.
Mm-hmm.
And I told him that frankly was probably, in my own opinion, too little too late, because most people are evading their income tax, and they would appreciate the fact that on the part of the income they pay tax on, you're going to lower the rate. But remember, they're also evading Social Security and state income taxes. So in California, for example, you may have somebody and you may say, okay, your top rate's going to be 25% and not 40%. But remember, he's going to add 15% self-employment tax and another 7% California tax.
Mm-hmm.
So he's over 40%. So he's already made the decision that it's okay to hide part of his income and pay zero tax. So if he's got, say, $20,000 of income that's not being reported, he's either going to pay under your program $8,000, or he's going to continue to pay zero. How likely is it that he's going to decide, I'd rather pay the $8,000? And Ryan looked at me like he, swallowed a lemon or something, and
oops, got him.
and because he really had no answer to that.
Mm-hmm.
And I said, and he says, well, all right, well, what would be your suggestion as to how to fix that? And I said, the only way I believe you're going to fix it is you're going to have to prosecute multiple times more than the 2,000 people a year that are prosecuted for federal violation. You're going to have to become much more aggressive in tax audits. You're going to have to multiply the number of auditing IRS agents. You're going to have to make their audits much more intrusive. You're going to have to demand much more evidence from taxpayers. And frankly, you're going to have to become so intrusive that you're going to discover some of these, because these people who are doing this are not stupid. They're set it up in such a way that it's very hard to find. And I said, I don't know that any member of Congress wants to be the person who takes credit for doing that. And again, he looked at me like he wasn't pleased with that answer.
I can imagine. And there we go, Steve Hayes talking with Paul Ryan. And guys, I thought it was really telling that Steve says Ryan had absolutely no answer for the evasion question.
Yeah.
The only answer to the evasion question is to get rid of the system that is so easily evaded.
that simple answer seems to be beyond their comprehension. I mean, they are so ensconced in the system. They can't think outside their tiny little box, but there is a better way. There's a much better way, the best way.
Now, Randy, you've got some info on this, I do believe. The study that AFFT commissioned to study how much evasion you'll get under the income tax versus under the fair tax. Elaborate on that a little bit.
Well, in 2012, a professor at University of North Florida, Dr. Richard Sabula, and another professor, they went into huge detail in terms of evasion, both domestically and internationally, of income taxes, payroll taxes, and investment taxes. And at that time, they arrived at a figure of, best estimate, $600 billion.
Now, that's money that's not being paid to the IRS that should be paid, and the rest of us are having to make up for it.
It's what the system is leaving on the table.
It's owed but uncollected taxes. It's taxes that they can identify were owed and should be collected, but they're unable to collect it for a variety of reasons. They can't get to the people that they would have to collect it from. The companies no longer exist. And the cost of doing it with the resources that they have would make it even more prohibitive than what it's costing them today. And I think the estimate is roughly $25 to collect $1.
$25 to collect $100.
$100.
Yeah, about 25%, which is terribly inefficient.
And it's as they go after these evaders, that cost is going to increase because they've ignored the difficult ones because they're simply understaffed. If you want to think of 88,000 employees as understaffed, they literally are understaffed. At one time, the IRS was over 100,000 employees. And when you think how many of those have worked their careers and are now on long-term pensions, to take the IRS back up to 100,000 and to add another 20 or 25,000 to try and increase the collections to reduce the evasion that is coming is just going to be an astronomical cost.
Because the study shows that what's going to happen to the evasion rate in the future?
It's going to continue to climb at an accelerated rate, and it's because of what we call the non-traditional worker gig economy. And that's a term that I think Steve Hayes uses now, where we literally have fewer and fewer W-2 workers who have straight payroll deduction. They get a W-2 at the end of the year. They've given the government an interest-free loan for a year, and they get a little bit of money back because they overpaid their taxes. What we have now are consultants, people that work a gig here, a gig there, and cumulatively, many of them earn between $75,000 and $125,000 a year. And if they file a return at all, which a lot of them are not, they file a return on one part-time job where they did get a W-2, and they qualify for an earned income tax credit. So they end up basically no payroll taxes to speak of, no income taxes to speak of. They fly under the radar. They're Uber drivers, dog walkers, house sitters. They run an eBay store, which it's very difficult to track profits and profitability off of something like eBay. And the IRS simply does not have the resources to try and hold this level of evasion down. It's going to be in the 700 billions within 3 years. It's going to climb 800, 900 to $1 trillion a year by 2022, 2023, somewhere in there. And cumulatively by 2026, there will be $9 trillion of evasion over this decade. 2017 to 2026, you'll have roughly $9 trillion in evasion.
And that's money that is not paid to the IRS that should be paid, and the rest of us who are paying our tax bill have to make up for that $9 trillion.
Question here, guys. How much evasion do you think it's going to take to get the Congress critters' attention and get them to realize that the system stinks? They need to get rid of the entire system that lets all that happen. And the evasion with a fair tax or a consumption tax like the fair tax is much, much less than what we're talking about here with the income tax.
What I've mentioned before is that the American economy and the way people earn a living is evolving. And it's evolving beyond what the income tax can keep up with. All right? Things are changing. The fact that people are doing a lot of little jobs is not a bad thing. When you try to keep up with it with this income tax, it can't keep up with them. So we need to scrap the income tax.
But Randy, you have seen some realization on the part of the Congress that evasion is going to be a terribly, terribly important thing to deal with here in the future.
Yes, there are two absolutes if you're in Congress. One is you absolutely want to stay there. That means you have to get campaign donations. You have to continuously run for office. The second absolute is you want to be able to spend money. And you want to be able to spend it at the levels that it was being spent at when you came in with an inflation factor so that you continue to spend more and more in order to reward the people that are giving you the campaign donations so you can stay in Congress. Steve Hayes reports that what he's seeing is a realization that the golden goose has been strangled. It's not completely dead, but it is gasping for air at this point. Congress is worried that the system has imploded and that the pieces have not hit the ground yet. So more and more people in Congress are saying, well, what can we do to avoid total collapse of the system? There is a Democrat senator by the name of Cardin from Maryland. He has a tax plan that is a combination of several of the worst things. It includes a consumption tax. It includes a high income tax, which is on earners of $150,000 or higher. And if you're a two-paycheck family in the Northeast, $150,000 isn't as high as it sounds. It's a consumption tax, payroll tax, income tax, and it's definitely going to slow the evasion rate some, but it's not going to eliminate it.
Go ahead, Bob.
No, I was just saying, when we were looking at some of the stuff that was on that Congress.gov site, we found a bill that just says we need to get rid of the tax code. Remember that one, the tax code replacement? He didn't address what he should replace it with, but they are realizing that the tax code needs to go away. The answer is right under their noses. H.R. 25, folks, the fair tax.
We need 218 people in the House to recognize that.
That's true.
One of the things I found on the internet here is Representative Devin Nunes. He's got a plan for what he calls a consumption tax. And let me read it. I'll be very quick here. While America awaits details on President Trump's tax plan, one Republican lawmaker from California is proposing to fundamentally change the tax code. We are getting rid of the income tax. We are doing something that hasn't been done in 100 years and so forth. And he said that we are moving towards a consumption tax. But here's his consumption tax. This would work by subtracting income tax from expenses and paying a taxes on whatever's left over. It's a very simple system. Yeah, but somebody has to register the income tax, and then they're going to have to know your expenses. So you're going to have to give even more information.
And that's only for corporate taxes. That's only for business taxes, so that they're going to write new rules as to what income is for businesses. And there's going to be a big fight, and there's going to be more lobbyists. And then they're going to write rules for what expenses set off against that income to arrive at a net figure and tax at 20%.
I'm glad you mentioned that, because this article didn't make that clear.
He's not saying that.
Okay, yeah. We're running out of time here, guys. The upshot of all of this is we have to encourage people to, A, support AFFT so we can continue to do the kind of research that we're talking about, and get on your Congress critters and tell them you want the fair tax.
And get on the White House, too.
Indeed. Go ahead with that.
Yeah. Well, we've mentioned this before. whitehouse.gov/contact. Go to the website, whitehouse.gov/contact. And you'll see a place there. You can say it has a choice of whether you're sending a message to the First Lady, the President, this or that, and so forth. And you put in your name and address and so forth, and then it gives you a box, and you can say anything you want. And what you need to tell them is that their current considerations are still going to be too confusing, lead to too much evasion, they're going to lack stability, and anytime you're thinking about a system that keeps the income tax in any form, it's going to be corrupted. They need to scrap the whole idea, completely scrap the whole income tax and replace it with a fair tax, which has tons of research behind it. And we already have a bill in Congress with a lot of co-sponsors. So we've got to do this, people. Every listener, you've got to go on to whitehouse.gov/contact and insist that the White House considers the fair tax. That's the only way we're going to get it done is if we make a lot of noise.
Okay, and Randy, go with the bigsolution.org. Hit on that some.
Well, let me mention the contact with the White House is not limited. You can do that daily, and we would ask that you do it daily.
Yep.
Now, our campaign site is bigsolution.org. Big Solution, because America has big problems, and you must have a big solution. At Big Solution, you can do three things. You can contribute, which we really need because that study with Dr. Sabula, part 1 is $9,000, and that's the tax evasion current. Part 2 is $6,000, and that's evasion or lack of evasion under sales taxes and the fair tax. So go to Big Solution, connect, support, contribute.
And of course, FAIRtax.org is the site where you can get all kinds of information about the fair tax. If you've got questions about how it works or anything like that, FAIRtax.org has a lot of good research for that. And again, in a nutshell, it's just a consumption tax you pay at the cash register anonymously when you buy things, new goods and services, period. Totally anonymous, I won't say totally painless, but it's a whole lot less painful than the income tax system that we've got now.
Well, there are 45 states that have a sales tax, and you don't hear much about that. It's pretty automatic. It's pretty simple.
Okay, we're down to a couple of minutes left. We've got to mention our Facebook Live thing. Randy, thank you so much for the behind-the-scenes work you do with those things. Our next one will be on March the 6th, which is a Monday night, and then we're going to do a Saturday night on, would you believe, April the 15th.
Yeah.
So join us on that. Randy, you had something else to go here right quick?
No,
you were waving at me like I thought you had something to say. I've never seen you speechless before.
Actually, forgot what it was.
Our last Facebook Live was very successful. We had over 2,000 views. The next one, instead of streaming it to the FAIRtax Guys Facebook page, Randy has graciously allowed us to stream it to the FAIRtax official Facebook page, which has a much larger audience than the FAIRtax Guys. And so, all right, and we've got 1 minute left, so we got to wrap this up. Okay?
Facebook.com/FairTax.
Yep. So we're going to have Facebook Live on the 6th. We'll be doing another episode of FAIRtax Power Radio as soon as you know it. And you can always contact us at thefairtaxguys@gmail.com.
All right. And, of course, the Facebook page is where you can talk to us and leave us comments as well.
Yeah.
And the webinar, real quick, you sign up for that. That's on the fourth Thursday, I believe it is.
Fourth Thursday, go to fairtax.org/webinar. Sign up for that. Tell everybody you know. It's a good way of learning the basics about it once a month.
And again, Randy, thank you for your time and effort today. We do always appreciate the picking your brain with the fair tax and all that.
Yeah, we needed them today.
But we've got to wrap it up, do it to it for this edition of FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
The FAIRtax Guys reminding you that the fair tax is America's big solution. And once you understand it,
you'll demand it.
Fair tax is coming. Don't stand in